I mean, but would you even want to be standing there? Like, guilty or not guilty, I don't know enough to say what's going on there, but you just know, like, if you're standing there, you're kind of asking for it, right? No, yeah, you don't, I wouldn't be anywhere near that. Like, Mall of America's over there too, you know. That's a fun place, but today's not today. It's not the day. I don't know what's gonna happen, but man, we're about as far south as you can be away from that. I'm kind of, who in their right mind would stand? I mean, now if you're for or against it, I get that, but you taking chances there. Oh. Hey, welcome to the closing beat, everybody. Happy Tuesday. How we doing out there? Hope you're having a good day and all is good, because we're going to talk about the stock market here today. We're putting all that other stuff aside right now. We like to focus on the numbers here, the market, anything that affects your money. If it happens to get political, then it happens to deal with your money. That's the only time we talk about that, or any of the current events. There's actually quite a big current event going on right now, and that'll be the focus for tonight, kind of overshadowing Netflix's earnings. But we're going to cover all of it here tonight for you, because that's what we do. If you're one of our clients, our Wine and Wealth class last week was a position update. So we went through all of our portfolios. If you don't know, we manage our own portfolios here. We make our own changes here. This week, we're going to talk about, should you use money to pay off your PMI on your mortgage? We're going to go through an exact example. We'll go through all the geeky data and everything, and not just the general personal finance thing. We had a client recently ask me this, and I broke through a whole scenario for them, and I want to share that with our clients. So this Thursday, that's what we'll be doing. On our research site, if you want to join us there, it's $13 a month. If you want to join us, we did trading strategy. We published there start to finish for you guys that are into the short-term trading. We did a breakdown of the transportation sector industry, as far as how to break it into categories. People first, then things is how we talked about it, just to kind of throw a little homage to Susie Orman there. We've got a lesson on our earnings stats, lots of great stuff there on the research site if you're interested. And that's basically it. If you look to the right-hand side of your page there, you can see the stock market continuing to pull back. You love it, right? Where are my pullback people? Where's Tandra? Tandra loves the pullbacks there. We're also going to do a separate segment today on earnings, because earnings are picking up. We've got a lot to talk about there. So let's start with the markets here. How did the major markets do today? If you look at the Dow, still up about 11% year to date there, but I'll go over to the Dow here. Goldman Sachs and Boeing were your biggest drags on the Dow here today. The financials as a whole pulled back, so it wasn't just like Goldman Sachs, but in the Dow that stuck out. Boeing now below the 50-day moving average there, and all of these pulled back, which is unfortunate because you had some really strong names in the Dow today. United Healthcare led the way. It was really a sector-wide rally in healthcare as well. But then we look at IBM. There you go. That's the earnings from yesterday. IBM, about 4% on the day. Revenue came in higher by 2.4%, beat all estimates out there by 1.1%. They are back to profitable there. One thing that I found interesting, corporations handle money different than personal, me and you. So I often say, why not replicate what they're doing? Let's treat money as if you are the CEO of a company, and no matter what, right or wrong, I shouldn't say it that way, but no matter what you feel, you do right by your shareholders. In your case, your shareholders are your family. Well, their debt, let's put it this way. Their cash on hand was down $3 billion. That'd normally be a bad thing, but their debt was also reduced by $5 billion. They're not out there spending more money right now. They're out there doing creative financing techniques to pay down debt while they can, right? Because times are good. Well, times are getting better for IBM there. And so that's what you have as far as IBM going higher on the day. If we look at the S&P 500, it broke 11 straight days of being extremely overbought. Last week's Wine and Wealth, Notes from Jazz that I did for clients was showing that the stock market was extremely overbought. And it doesn't mean that we were going to pull back. We all hoped it would pull back, but doesn't mean that it was going to pull back. But being overbought, I saw the question yesterday. I didn't get to it. I'm sorry. 2 standard deviations or more away from the 50-period moving average is how we measure being overbought. I did a video on this for you guys last week as well. It is, 11 days of being overbought, extremely overbought. The previous record was 13 days if you want to go back. You got to look to 2013. 2004 would be the time before that at 14 days, and the highest ever on record for the stock market being overbought, more than 2 standard deviations away from the 50-day moving average, happened twice, actually, in the early 70s and 1955. 15 days. That's it. We were at 11, darn near 12. right? We almost darn near got to 12 there. So gives you an idea that the market can't stay extremely overbought for long. Now, this could just be a really, really short-term pullback, and tomorrow we start rallying higher, right? That would be sort of par for the course for the stock market here. But what that tells you is there needs to be room to breathe. If we go sideways for a while, that would be normal. If we fall a little bit more, that would be normal too, right? So the fact that we did that is incredible there. If you want to look in the long term as well, we are now in the 97th percentile of the price being extended from the 200-day moving average. So I've got the chart here for you. This is the S&P price relative to its 200-day simple moving average. You can see that up there at the top if you want to read through it. All right, so what does this mean? Here we're looking back over the last 20 years, right? So we are showing that if the line is right here at 1, that would mean that the price is equal to the 200-day moving average. It's right there, right? So you could maybe just look straight across and see how often that happens. If we're below 1, that means the price is now moving under the 200-day, and the decimal point in this case, what you're reading over here, is the percentage distance away. So, for example, right now we are 15.3% higher than the 200-day moving average. Is that normal? Well, you can look back and say, all right, I've got a little bit of time that it's happened here, but nope. Only one other time in the last 20 years have we been this extended from, one other time besides what we have over here, but only one other time this extended from the 200-day moving average. That means it's in the 97th percentile of all occurrences, and you can visually see that. That's what I was trying to show you there. It's almost the highest that it's been in 16 years. What does that mean? Let's pull back, right? Let's just get it done, right? I know a lot of you want that as well, but let's see what happens. We look at the Nasdaq here for the day. It's in last place as far as the four major indices. I haven't done one of those videos in a while. So last place, still up about 7% year to date. Today, if you're taking a look inside of it, you got Tesla helping the Nasdaq, just up a fraction of a percent there. And you had healthcare stocks like Amgen, good day for them, up 1.25%. Biogen, 1.5%, although it's not doing a whole lot here lately. They did their part, but unfortunately, Apple, with their spring into spring or whatever it was called event, down 1.2%, totally normal. We'll cover that in a minute. And Amazon down 1% as well. They erased all the contributions of the gains from the stronger stocks in the Nasdaq there. Also, you got Netflix reporting earnings here, and Netflix finds itself in a bit of trouble, down about down about $50 after hours there. It's the first of the FANG stocks to report earnings. Getting that out of the way, right? It's the one that's kind of underperformed a little bit as well. It fell about 11% right on the close there, as soon as the markets closed there. Beats on earnings, revenues were as expected, basically. And the issue is in the paid subscribers. We always sort of say, when you look at a stock and you wonder what people will focus on earnings, each stock has its own metric. Netflix, the metric has been subscribers here lately and profitability. But new paid subscribers, we were expected 6.4 million, we got 3.98 million. The low end of the range was 4 million. Even Netflix themselves said maybe 4 million, maybe a little bit more. So they missed their own forecast there, and they said going forward, we expect to only add 1 million new subscribers over the next quarter. We were expecting 4 million more. Now, Netflix, to their defense, if you follow them after hours, they said, it's not that we're doing bad, it's that the virus pulled forward the new subscribers we would have got right now. So if there were no virus, we would have incrementally just added more subscribers. But because of the virus, everybody stayed at home. Those that were thinking about signing up for Netflix did that. And so they were trying to sugarcoat what was quite a miss there for Netflix. So down after hours there, and in the Nasdaq, that's going to weigh you down going into tomorrow as well. All right, we'll go to the sector breakdown for the day. How did the major sectors of the stock market perform today? Here you go. So on the chart, there's not a lot to cover here, a little bit, but we'll go down to the bottom. You got energy, by far the worst performer today. In our portfolios, by the way, those were our worst performers. It was our worst sector of the day, and it rightfully so. It was just the worst sector overall. Now, it's still the best year to date, but it's rapidly giving back a lot of those gains. At one point, energy had far surpassed every other sector out there, gains of over 40%. On March 1st, if you watched the closing beat, we went through a detailed research review of what was likely to happen. How often did energy gain that much so fast early in the year? And what happened afterwards? Well, if you're curious, it's exactly what's happening now. Just a slight pullback there, ever so slight, but getting faster. I give you that. If you look at the top here, you're going to find utilities and REITs as interest rates keep coming off of their highs. We look at the short term, and let's just go to the long term. So we look at long-term rates here. As prices rise, rates are going lower. As prices rise, rates are going lower, so that's helpful to utilities and REITs there. If you want to look inside the REITs, now you're going to have earnings inside of some of these, so just careful what you're looking at. It's not that the sector may have done well. This has a lot to do with earnings coming out. But if you look overall, I'm going to sort by contribution here. Oops. You've got American Tower and Prologis. They make up about, well, over 20% of the sector today. They had good days. That's certainly helpful. These two are the biggest contributors as well. Crown Castle and Equinix also there. Those four are pretty much the driving force behind REITs as far as things, how they go right now. Now, if you look at the sectors overall, you can see how they perform today. But if you go to 1 year, this is kind of interesting. You've got your pick of where you want to go. So look what's happening here. You got a handful of sectors that are outperforming, great strong momentum over the last year. You've got energy, just whatever's going on there lately. And then you have down here those that are dragging or underperforming. So if you're a contrarian investor, you're looking down here. You're saying maybe healthcare starts to wake up. It already is, really. REITs, utilities, consumer staples, maybe they finally get moving here. They've been a little bit behind. Alternatively, you could be looking up here and saying, I want to play momentum, or be a contrarian and want to short the sectors. But you can say, I want to play momentum. We got basic materials up here. You've got industrials, tech, communication services, and banks really are the top performers. So it's a really interesting divergence in the way the sectors have been performing if you're an investor and you want to take a look at those sort of things there. So that is our sector breakdown for the day. What are we going to do next? Let's do new highs and lows, and then we'll go through the earnings here. So new highs and lows, you got about 62 of them on the day. You got it. Whoops, no, I always do that. Advanced auto parts hitting new highs but pulling back there. Actually, every auto sale what do you call them? Supplier, wholesaler, reseller, things like that. All higher or hitting new 52-week highs today. So O'Reilly, you might have one of those in your area there. LKQ, we've got a big one here where you go like pick your own part and you like wrench on the car and take the alternator out and do manly stuff and things like that. So LKQ also hit new highs, then pulled back as well. And AutoZone is another one. We've been talking about that. Retail sales in that category right now are doing really, really well. All right, going on over to Sealed Air. SEE is the ticker symbol. These guys make like food packaging, shrink wrappy kind of things. You'd know it if you saw it. Anyways, a little breakout here on the chart as it makes new 52-week highs. Iffy on the volume, though, right? Not so great on the volume. Philip Morris did exactly like it normally does. They reported earnings there, and if I go over to earnings, we find out that Philip Morris beats by 17 cents. They raised their guidance going forward, stronger than normal revenues. If we go over to the charts that we've been looking at over the past couple days here of earnings, Philip Morris tends to beat on earnings more times than not, revenue more times than not, check, they did that. It tends to gap down, check. It did that. It tends to reverse the gap down and go positive for the day. Check, it did that. And it tends to stay positive for the day. What happened to Philip Morris here today? Well, it gapped down. It reversed the gap and went positive, and then it stayed positive. So historically, it performed right in line. If you own that stock, you are not making any changes to your assumptions at the moment or really looking any deeper. Video came out on Monday for you, FinTips video. All right, Hershey, little tiny breakout here. You've got basically a larger breakout that you likely missed. It had a good move and now consolidated ever so slightly for you to maybe produce another breakout that hits new 52-week highs. And Broadridge, which if you're not in the finance space, you probably don't know who they are. It's like fintech software, but for advisors and wealth managers and things like that. Anyways, Broadridge hits new 52-week highs there, and kind of an interesting pattern. I mean, it's been strong overall, not too overpriced here, but a nice consolidation and starting to move a little bit higher for you, so there you go. All right, let's go over to earnings here for the day. All right, we've got a handful of things to take a look at. Do I have all of them listed there? All right, some things that you're not likely going to see anywhere else. All right. There you go. So you got American Campus. So this one's interesting. It's not a stock you'd normally talk about, but it's kind of important because what it is this company operates campus housing, both on campus and off campus. They do a little bit of both there. Revenue comes in 2.5% higher than the best estimate on file. In other words, you have a handful of analysts, they place their bets, tell you where they think it's going. They were above all of them. So you got a little bit of a breakout here today. Revenue being better than expected. That's top line numbers, remember. They say they still have not recovered fully from the COVID drop-in. Who would expect them to do that? But 4.1 something percent yield. So if they're already showing you that they're recovering, things are getting better, and you're getting a 4% yield, maybe something to look at there. I don't know. United Airlines pulls back. In fact, United Airlines comes out with earnings, and not good, back under the 50-day moving average there. Loses $7.50 a share, slightly more than thought originally, but it's the only stock that reported a miss. Everybody else beat, right? Revenue per available seat mile. There's a lot of metrics here I'll cover that are particular to airlines, and as they report earnings, I'll do the same and come back to them there. But revenue per available seat mile. How much money are they making for a seat that's filled for every mile that they fly? Yeah, they track that stuff. Was 4.7% lower than forecast. That's not good because we keep hearing demand is increasing. In fact, the CEO did say demand is increasing. So he was optimistic, but we're not seeing it on paper just yet there. Available seat miles down 2.3%, meaning the number of seats that are available to charge and earn or money from were down. In other words, there's less flights. Well, that also, what's going on? If the demand is there, what's the problem there? Load factor was 56.8% versus 58.9%. That's the percentage of available seats that's actually filled by a passenger. So gives you an idea of how many seats are empty is basically the way to look at that. So kind of a miss across the board for them, not in terms of maybe the bottom line numbers there, but kind of a miss in terms of go tell us that there's demand, but we don't actually see the demand. Need to kind of see that demand there. All right, who's next? You got Johnson & Johnson there, beats by 26 cents. They sold $100 million of their now paused COVID vaccine. I thought that was a lot, right? Maybe investors thought the same. And I believe somewhere overseas they've reinstated the Johnson & Johnson vaccine. I caught just the tail end of that. I'm not sure. AutoNation pulls back here today. They beat by 97 cents. You know, we used to beat by a penny. The old adage used to be beat the street by a penny, or beat the street by just 1 penny and you would have a good day. We're beating by 5 cents, 97, 44, $1.05, 26 cents, 44 cents, 21 cents. I mean, we're killing it, right? So that's not because companies are doing well. That's because analysts are having a tough time figuring out everything that just happened. So know that that's not normal. Anyways, AutoNation here. Store sales up 27%. Obviously, that's reflected already in the price of the stock there. The company is moving aggressively to pre-owned vehicles because they think the semiconductor shortage will continue into next year. So is that a good thing or a bad thing? Remember, I always tell you guys, ask questions. If somebody tells you something, ask the question why. Ask them what's the difference. Does that help? Does that hurt? Is it good news, bad news, whatever? Well, here's the thing. Did a little research on this. The stock is likely lower because the company is moving to used auto sales as quickly as possible because that's where all the action is right now. New sales for the company typically account for 51% of their revenue. All right, you're moving away from that, right? Because the demand's not there. Well, the demand is there, but the car production is just not there, right? Used car sales only accounts for 27% of their revenue. Now that number likely goes up, but that's tough to go into that space and compete with Carvana and CarMax and all these guys. That's a tough one there. Also, if you look at the profit margins they make on cars. On new cars, their profit margin is 16.4%. On new cars, it's 16.4%. On used cars, it's only 12.9%. So now you're moving into an area with more competition and less profit margin, and you're spending money to do that. I think that's probably why you saw the stock take a little bit of a hit today. That's maybe a little more analysis than we normally do here, but hopefully that helps get you to hit the subscribe button, right? I'm supposed to say that. All right, Lockheed Martin beats by 27 cents. They raised guidance there. They also raised their estimates for free cash flow. Though this is a pretty tough technical spot right here, right? So you moved out of some lows. You got a lot of people underwater on their positions, right back to prior highs where most everybody can say, I'm close to break even, if not maybe a small profit. I think it's a tough one to decide you're going to go diving in there. Just if you ask me. Procter & Gamble beats by 6 cents. Organic sales miss in the baby care segment. They also miss in their beauty care segment. I go in a little bit further here for you guys because think about it. We were supposed to all be at home having babies, because we're working from home. What else did we have to do, right? And then we're not. We're supposedly. I get the beauty one, right? Because we're at home. What kind of makeup do we need? We're not going to work, and maybe people, don't need to get as dressed up. So that shows that a little bit of that is off there. Fabrics and income for the home was where they beat, 7% higher versus 4%. So that makes sense. We're at home buying more sheets and stuff to just be comfortable while we're home and everything. But boy, they missed on that baby segment there, and I'll talk about them in just a second because you want to talk about inflation? Stick around. Steel Dynamics beats by 4 cents. These guys are like a carbon steel producer. I like to follow them a lot. They also do recycling, but recycling is only 11% of their business. So a lot of people mistake that. They think, oh, recycling, this is great. We're recycling steel. It's a revenue source. It's only 11%. It doesn't technically move the needle there. Companies said they see robust demand and pricing power gaining momentum, meaning they're able to raise prices and people are still paying those prices. Industrial and auto demand for flat sheet steels was especially robust, according to the CEO, and if you look a little deeper into there, which makes it kind of interesting because they bought Heartland Steel 2018, and they paid $400 million for it. That was a big deal then because it didn't seem that they were really worth that. Oh, we're not picking on them now, huh? You're not just picking on them now. So that's what you have as far as earnings go for the day. And I thought I'd go a little bit more in detail with the earnings in case it's something that you own. Let me know. We don't have to do all that research. It does take quite a bit of time, but that's what you have there. Stocks in the news, and then I'll take your questions. Back to Procter & Gamble for a second. They're going to raise prices on Loves, the diapers, Pampers, Always, Tampax. This is L. And so they're raising prices to pass on extra costs because of inflation and the higher prices of commodities. You are now paying for that. So that's just one of them. Coca-Cola, remember just yesterday, they're raising prices and changing the packaging of their cans, probably to make them smaller but make you pay less there, because of increased aluminum prices. They took a shot at Trump for the aluminum tariffs and everything. Kinder Morgan, they're raising prices on Depends, Poise, Huggies, Pull-Ups, Kotex. And Smucker is raising the price on Jif peanut butter. General Mills is raising prices basically across the board. So those of you that wanted inflation, yeah, there you go. It's first showing up in these household products that we need and use all the time there, if you're familiar with those brands. So, that's in the news, and that's likely not at the front page of the news there. American Airlines comes out with, they said they're going to reduce flights in South America because there's not enough demand due to COVID, right? And that's a respectable excuse. Down 5.5% on the day, and it's now down 11 days in a row. That hasn't happened since 2015. Is that a good thing, right? You're asking questions now, right? I see what you're doing. Apple down a little bit. This is normal. Apple on their new product announcement day tends to sell off. Rally into the news, sell on the news is very, very typical for Apple. Also, they didn't really announce anything cool. I mean, come on, guys. More colors of iPads. That's cute. A new remote for the Apple TV. Okay. That's cute, too. An AirTag for lost items. That's actually kind of clever. I kind of like that one. But where's the excitement? Maybe some of their new M1 chips and some of the iPads and stuff, but nothing. Overall, kind of a snoozer there for them. So, what are you going to do? It's not my company. I don't get to choose what we do. All right, PayPal. Next stock here in the news. You can now buy crypto. Buy, sell, hold, do whatever you want on Venmo, which is a PayPal product there. And then Whirlpool is the last one there. They are going to do another $2 billion to the $500 million or so in share buybacks that they were already going to do. And it makes sense to me, right? How else do you make the stock go higher? That's what's going on there. WeWork. WeWork is going to start accepting crypto if you want to lease some of their space. They'll do anything they can. They need it, man. So good for them. And then BMW had earnings there. Profit margins are almost 10%, which is a record for them. That's like the highest in 4 or 5 years for them. Sales growth they found in all regions, in particular in China. BMWs are killing it out there. And if you want to look at BMW, it's not traded here in the States, but if you want to look at that one, you're going to look at this ticker symbol here, BMWYY, if you just want to trade the ADR for BMW. So that's what you have there. What else do we have coming up here? Some changes in the S&P 500. A ton of earnings going on tomorrow, so we're going to be focused on that one. And let's see what questions I can answer for you, if anything at all. Harry's saying 10% pullback. Yeah, bring it. I'm with you. Let's do it, man. No chips, no new toys. Or you're going to pay a lot more for those toys if you want them there. Yeah. Uh-huh. I love it. You got $182 cost basis on N phase. Should you hold, sell? You've been buying the dip, but it hurts my portfolio. So what's the plan? What's the plan? You like that? And go over here. What are you doing? What's going on? Huh? What's going on? So let's take a look. All right. So you got to have a plan before you do anything here. I like pullbacks, so I'm going to be naturally more excited about a stock that's pulling back. But if it's hurting your portfolio, at what point do you say enough is enough, right? It must be a sizable amount of your total portfolio to make you sweat a little bit. But at what point do you draw the line? Now, if you're looking for that point, you got to look under, you got to let it give a little bit more room, right? So you've got this whole 135 to 140 area, which is acting as support right now. Now you hope that it just starts to bounce, get up here somewhere, give you a higher low, which makes you feel like there's a new uptrend starting. I would think that's the next likely direction. I think you're probably going to be fine. Of course, check their earnings. This one can be a little bit volatile on earnings there. Yep. You think Nucor is going to kill it on earnings? All right. I like that. I like the style there. Already a little bit overbought. So it'd be one that if it does gap higher on earnings and it's some way out of the norm gap, that might be one where you think maybe people are going to sell that one into the gap there. That one makes it a little bit different there. They're not on my list here for this week, so it must not be coming up this week. I like it. On Friday, you bought skills. You bought some calls. All right, what'd you buy there? 1250 calls. Good job. So first of all, you basically bought the closest to the at the money that you could buy. It's a lottery ticket play, in my opinion, because what's going to cause it to rally again? Is there any reason that this will reverse course right here and head higher? And you've got plenty of time, right? December, you said? December monthly 1250s. Okay, so you got plenty of time, but in the short term, I think you just have to hold your breath and wait, you know? You just got to hold your breath and wait. I love it. Cool, man. Trying to do some different things here. I appreciate you guys hanging out with us today. And we'll be back tomorrow, do this all over again. And, of course, a lot of earnings, a lot of excitement going on there. So we will cover it. We'll be back. Let me know. Did you like the earnings review, or is that just something we can skip? Yeah, you just let me know in the comments. Enjoy.